All right. Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. The markets are open. It is 10:40 New York time. You see the New
All
York
right, hello
background.
everyone. Welcome to another episode.
You see the New York background behind me. That's like a staple on the show, but it also checks that my audio is working since I don't have a producer or a co-host. We haven't done the news show in forever. I need to text Jimmy Song. Maybe we'll get a news show going one of these days. I have anyway. I have a lot of travel coming up, and I'll tell you guys all about it as it happens. But for now, I'm around for a few days in one place. All right, let's go to the charts. Okay, so here we are. This is, of course, the on-demand videos page. Thank you very much, guys. I'm getting some last-minute people buying this. I will be raising the prices sometime this month. I'm also looking to create the private Zoom sessions later this month so that these trading videos remain relatively short. I'm also on, those of you that speak Russian, I will be on with Forklog in about an hour and a half. In an hour and a half, head over to the Forklog YouTube channel. I'll tweet it out as well. I will be on their podcast in Russian. I have not done that podcast in over a month. So it's definitely time to update the Russian community on my thinking. Filling up my mug. We're switching to the buy the dip mug for the week. So shout out, of course, to Double Up Barbie for bringing back, I should say, the buy the dip brand. Okay. Charts. The monthly chart has closed at 33,000. What can we say about this monthly candle? It is a borderline candle. It is half bullish, half bearish. Now, I can make the argument for both sides of the coin. This was a bullish month. We closed higher this month at the end of January than we started. So that is a great sign. However, we pulled back more than half the candle, which means this is technically a shooting star candle. Now, this is a borderline shooting star candle. I have my own rules for a shooting star candle. And let's see if it's a shooting star candle. The tone Vays volume will be able to identify if it is or isn't a shooting star candle. Though I do need to check the math. This is what the tone Vays volume does. And I have not released any of my stuff. I need to take like a month off from YouTube and just do a bunch of research and get my indicators out. Where's the tone Vays volume? I got to go to my scripts. Tone Vays volume. So yes, that is a shooting star candle. The tone Vays volume identifies shooting star candles based on the logic of the volume. Because if I put in regular volume, you see that the regular volume is green. The fact that the tone Vays volume is red tells me that that is a shooting star candle according to my rules of a shooting star. Because if you Google what is a shooting star, and the best way to do that, by the way, is to go, I haven't promoted this in a while. I need to update this section. This is the Learn Trading free tutorial from me. And there is a candlestick tutorial. So if you go to, I guess, click on these links, identifying, yep, right here, different types of candles. And if you look for a shooting star candle definition, hammer, hanging man, harami, they're in alphabetical order. Shooting star, a single day pattern that can appear in an uptrend. It opens higher, trades much higher, then closes near its open. It looks just like an inverted hammer, except that it is bearish. So this does not really give you a lot of explanation. Now, of course, you can Google a shooting star candle. And there is absolutely no consensus on what is a shooting star candle. Oh, that's not going to help at all. Shooting star, I'm gonna get very different things. So it depends on where you go for your definition of a shooting star. I mean, Wikipedia is probably the worst place to go, but I don't want to promote other people's stuff. So we can probably go to Investopedia, and I don't know if they give specific definitions, but everyone has like their own definition. And I decided to put my definition to some mathematical rule sets, and the best way I can know if my rule sets are met, because sometimes it's close, sometimes it's off by a penny. That is a shooting star candle, which means that it is a bearish indication. And that's why the tone Vays volume is red, while the traditional volume is green. Of course, the size of the bar is identical. I'm not altering the amount of shares traded. I'm just giving myself a visual representation. The yellow tells me that it's a doji candle. So you can see that that's a doji, and I know that I didn't even have to look at it. Like, I saw the yellow volume bar, and I know that is a doji candle hidden back there somewhere. And as you can see, that is a doji candle. This is why, and I wish I could make the tone Vays volume embedded in the back of the chart like this, but the trading view does not give me that functionality. All right, enough time on identifying doji candles, but this is important. It is a candle following an MRI monthly top. It is a doji candle, and it is something of a concern. When do you take this particular concern seriously? Let me just, 1 second. I did something real quick. When do we take this concern seriously? And then I'm going to leave this monthly chart. We take the concern seriously when the price drops below this blue line. Just drops. It doesn't even have to close. A drop below this blue line. Now, this blue line, you have two choices. You can be conservative and put it at the bottom of the opening price. You can put it at the bottom of the shadow. I'm going to be most conservative, and I am going to take this shooting star absolutely seriously if the price in February, and it has to be February, because in March, we're going to have different criteria. When in February, the price of Bitcoin drops below $28,750. That is my concern line. A drop below this line would make me bearish Bitcoin into the $20,000 area. Okay, that is the concern. Notice that is the same concern that we will have on the daily triangle, though actually a little bit lower. Ooh, ironically, that is the same line as this support line from the daily MRI, but we will get to that. Weekly chart. I have lowered the weekly chart to the 7-period moving average in order to once again follow Tyler Jenks and his methods of Consensio. By the way, this is a great tutorial. Please click on these links. I put the most relevant link in the front. If you want to learn about RSI or CMF, there is a link in the front. There is additional links. Some of these links will eventually break. This is all publicly available information. I need to review this page every now and then. And in any case, just keep an eye on this tutorial. I should also make new and better graphics. Well, better is going to be tricky. These are my graphics, but just more defined. Next, where are we going with this? All right, we can close that. And Consensio. So the on-demand workshops, the Consensio I'm talking about is right here, the Tyler Jenks Consensio trading system. Let's go to the weekly chart. I have lowered it to be the 7-period moving average in order to try and gauge how seriously should we take the current consolidation / bearish posture. If we close below the 7-period moving average, I will start to get concerned. Also notice this is the Tone Vays triple MA forecast, and we are going to be rolling over in the next few weeks that is also of a concern. A declining moving average is of concern, especially if the price is below that moving average. So we will know a lot about where Bitcoin is going over the next 2 weeks. The next 2 weeks are going to be very, very important. I'll get to GameStop in a second, guys, from a TA perspective, now that it's a new week. Unfortunately, you can't get the tone-based volume indicator. It has not yet been publicly released. I will plan to do this like over the next month. I'm going to have the next 2 to 3 weeks, but I plan to, I plan to do a lot of work between the middle of February up until the middle of March. And I'm going to try to release a lot of my trading view indicators that I've put together. I do need to work with my developer who is back, and we will do that. But yeah, but if I open this up, which I can't do on this chart, but if I open this up, like I have a lot of my own stuff. These are my scripts. There's going to be more scripts, my own CMF, my own, but they're not even like I'm not altering the formulas. I'm just altering them visually because I'm a very visual person. I'm not, I'm a visual person. And for example, the normal CMF, like here's what the tone Vays CMF looks like. That's not even like this. So there's red below, green above. So it's just my own visual representation. Now, I do have a couple of things that I have my own formulas, but I just have not had time to do enough research on that besides the MRI. So this week is a little bit of a concern. I would be concerned if we close another, it's okay if it's a red candle, but I don't want to see a close below last week's open, basically. I don't want to see the bodies break. I certainly don't want to see a new swing low. This weekly chart, the week just started. Today's Monday. We're on our first day of the week. So anything can happen. I really liked where we were going this morning. I drew this blue line yesterday. Let's go straight to the daily chart. The weekly chart is not very interesting right now. We had our MRI top, but the high came in like 4 candles earlier. That's not very helpful. Obviously, these arrows did not work out as planned. I really wanted to see a second consecutive MRI top close at the height and then pull us all the way back to 20K. We started pulling back earlier. What does that mean? Does that mean we're still on pace for 20K? Or are we going to find support somewhere lower than that and go higher? I'm leaning towards finding support lower than that and go higher, but the jury on 20K is still out. I'm going to leave these lines for now. They're not too much in my way, but eventually they will be deleted. Right now, we are being supported by the moving average, and I remain optimistic and somewhat bullish on Bitcoin, but that bullishness is going to be wearing really, really thin. The daily chart is currently my most important chart. Sometimes the weekly is my most important. Sometimes it's the daily. Right now, it is the daily. The daily is absolutely my most important chart because of this massive triangle that is a concern. I will drop all short-term bullish exposure to Bitcoin if the price comes back to the $30,000 range. If the price of Bitcoin drops below the moving average, this is the 50-period moving average, it is absolutely critical to me based on where inside the triangle it is taking place. That is the 50-period moving average. Oh, I'm sorry. MAF is my triple moving average forecast. That's my own version. This one here is actually not my version. That's someone else's that made it before me. I want to apologize if I gave myself credit for it. I have built my own, and that's the one I normally use. This is an older chart. I don't use it very often, but just fact checking myself. Willie Woo said to break the low at 28,000, there would need to be a black swan event similar to the COVID dump. I don't necessarily agree with that. I don't have to agree with my awesome friend, Willie Woo. I believe that it is very possible to drop below 28,800 while things are still rosy and hunky-dory. I do not believe a black swan event is necessary. I believe a black swan event is necessary to take us below 14,000, maybe even below 20,000. But I can certainly see us pulling back to 20,000 in an orderly, non-panicky, sky is not falling fashion, because while I may not necessarily, well, let me not say that. A mining expert told me that miners can get Bitcoin at 7,000. I find that I'm very skeptical of that statement, but he's the expert. I personally believe that miners can mine Bitcoin under $15,000 easy, and therefore a drop below 20,000, while unlikely, is certainly possible. So the daily chart is incredibly important right now. I got two huge metrics. Bitcoin above this green line is incredibly bullish to me. Incredibly bullish. Close above this green line. Let's be specific. Sometimes we just need to have a trade, and sometimes we need a close. In the case of the monthly chart, because it's coming off a doji, I'm not waiting for a monthly close below the blue line. A print below the blue line gets me very, very concerned. Ironically, this is below 28,800. I guess that's Willie's mark, as someone pointed out. Also, guys, do me a huge favor. Willie, because Willie is one of the very few friends I have in the space, and literally very, very few. If you are on his subscribing newsletter, please don't post any, private information from the letter in the live chat or ask me a specific question. Please only refer to Willie Woo's publicly available tweets, because I don't know what I don't really follow. I mean, I do follow him, but sometimes I don't remember everything, nor do I read it all in time. And as a favor to my friend, just like I don't share his private charts from his newsletter, please try not to share his private charts either. And the best way to hang out with Willie Woo for an entire week is, of course, to join us. Oh, I got to keep you guys posted on this. Is, of course, to join us at the Financial Summit, which hopefully will come back to Bali in 2021. I hope. I don't want to have to cancel it for another year. I really, really don't. It's an incredible event. Okay. Okay. Daily chart. Why is this so important? A close above this green line makes me incredibly bullish. We swung up there on Elon Musk's tweet, but we did not hold it. We then consolidated, we pulled back. It was looking very promising this morning. Very promising early in the morning US time when we were above 34,000. We almost made it to 35,000. We had a high of 34,736. A close there would make me incredibly bullish. It would be very difficult for me to fudge this triangle anymore. Incredibly challenging. And we would absolutely break this triangle and the moving average would continue rising. However, a close below the moving average, and it's not going to happen today, and it's probably not going to happen tomorrow. Probably, but though it could. But a close below the moving average would make me incredibly bearish. Not incredibly bearish, but bearish. Now, notice something. I am not waiting for the bottom of the triangle. I'm going to preemptively cut my bait on my long-term bullish trades because they are still pretty profitable. Because I got in, above 20 or around 20, actually. Might have gotten in just below 20. With the majority, I, of course, added more. I think the last time I added was down here somewhere. But right now, I am still pretty damn invested in a short-term trade, short to intermediate term bullish trade. And I am staying with that trade. But I will not take the risk of the of the full triangle target. There's no way I'm taking that risk. I'll take this risk with my HODL position, but I'm not going to take this risk with my trading position. There's a huge difference between a HODL position and a trading position. I'm not taking this risk with the trading position. So my trading position, I am watching this moving average very, very carefully. It has been a long time since we dropped below this moving average. The last time we dropped below this moving average, we dropped hard, okay? As you can see, here is where we broke the prior swing low, and the next day, we had a catastrophic fall of 10% for $1,200. Now, that's 12% though. 12% today is going to be triple that, okay? Huge difference. Again, huge, huge difference. We then stayed below that moving average for a while, and I didn't have to get back in until we broke above the moving average. Did I lose anything? Well, no, I got good sleep for it. We drop below the average. Let's say you get out the moment you're dropping below the average. That means you're getting out at 11,100. When do you get back in? Well, you get back in when you close above the moving average. Well, look at that. It's about $100 cheaper. But you were able to sleep sound at night because otherwise you could have panic sold right here at the low at 97. And now you're afraid to buy back in over here because now you feel like you're taking a loss and you're going to miss out on the entire pump. So I would rather avoid that. I would rather get out at the break of the moving average. Really important. The prior time we dropped below the moving average was here. This was a slightly different situation. Here, the moving average was also rising. So this is maybe a more similar environment. Here, the moving, actually, they're all rising. Here, we then swung back up, but notice we ran into our resistance line. I would not have chased it. I would have waited. I would have waited till it broke the highs. And then you had another chance to get in after the moving average has flattened out. Right here, you would have saved a lot of money. This was the big catastrophic crash in March, okay? So I am going to trust the 50-period moving average. It has served me, well, it hasn't been very useful for the last 4 months because we've been so far above it. But now that we have tested it not only once, but twice, I'm not going to mess with it. So I will take this triangle incredibly seriously at the break of the moving average, which is good. Short-term charts that were not having a very good 4 hours. I was very happy, a few hours ago, but the last 4 hours have not been very good, and we just started a new candle. Right now, we're still pulling back. This low is pretty key to me. I don't want to see a lower 4-candle close, and I don't want to see a lower 4-candle low. We're not going to know what's going on because I'm getting off the stream in about 10, 15 minutes. So this is where we are. GBTC isn't doing all that well. The GBTC premium is an absolute low. Now, it looks like there has been so much arbitrage of GBTC premium. I'm not going to be expecting GBTC premium to go above 25%, possibly ever again. People have taken enough advantage of the GBTC premium. So it's unless there is unreasonable FOMO, GBTC premium might be depressed for quite a while. The Ethereum premium is not even existent. The Ethereum versus Bitcoin remains more bullish than bearish. And the Ethereum dollar chart is also consolidating. Bitcoin dominance isn't doing much. Gold futures, gold isn't doing anything, but it's all about the silver. It looks like Wall Street Bets has continued. Wall Street Bets might have moved on to the next squirrel. And this is why I mentioned they may not care about GameStop much at this point. Eventually, movements die. All movements die. There's only so much protesting you can do. We can go protest the vaccines once, twice, 3 times, but eventually you move on. because you can't protest forever. You need to have a life. Yeah, so people are asking you about the indicators. So look, I plan to mostly because I have a hard enough time keeping up with customer support. The only indicator I charge for is MRI. All my other indicators that I will be building, they're not my own invention. They're not my own thing. I will not be charging for them. I will release them for free. I may or may not release the formula for free, but I will release them, like my version of CMF, my versions of all of them, right? So they'll be released. Even the GBTC Premium, I'll release them for free. I don't plan to charge for those. I give away 80 or 90% of everything I do free. I don't understand why I have so many haters for it. I charge for very little. Very little. Where was I going with this? So silver. Silver was pumping early. Look, I would love to see them pump silver because I think silver is a shit coin. And I'm sitting on a lot of physical silver. And I can't wait to get out of my physical silver. But I'm also greedy. And I don't want to sell my silver under $50. If Wall Street Bets want to, change their movement to pumping silver, I'm all for it. And I would love to get out of my silver. But at the same time, my advice is always honest. Look, guys, I'm sitting on a shit ton of physical silver that I should have sold 5 years ago and bought Bitcoin with. Hell, I should have sold all my silver right here back in August of last year and bought Bitcoin with it because Bitcoin went up 3x and silver has just gotten me back to break even. So I could have 3x'd my position by now by getting out of the shitcoin silver trade and into the Bitcoin trade. I'm sitting on, a fair amount of ounces of silver. I'm guessing it's at least 500 ounces. I don't know. It's not in my hands. So I have no idea. And it's heavy as hell and it's taking up room and I don't know what to do with it. So I can't wait to just, put in a wheelbarrow and bring it to the silver shop and convert it into either gold coins or straight into US dollars. But I hate US dollars now. So I don't know what I'm going to do with it. Well, Wall Street Bets could be behind it. That could be their next boogeyman. Well, someone is behind the silver pump. I know Max Kaiser has been promoting the silver short squeeze for years, decades even. But I will be exiting my silver. If I can exit my silver, see, here's the other problem. Because of my market views, I'm going to go to Twitter and I'm going to pull up. Oh, I'm going to retweet this. This is me on Forklog in less than an hour. I'm going to retweet that now. So if we go to Peter Brandt, actually I should go to Saifedean. But Peter Brandt tweeted out about silver here, this. And it's great because then Saifedean quoted it. Oh, damn, 150 quotes. Shoot. I got to find the Saifedean version. Damn. Should just go to Saifedean's. I actually really like this exchange. Hold on, I have to look for Saifedean. Okay. Where's Saifedean's Twitter? Great. Oh, wait. I'm misspelling it. There it is. All right, let's go to Saifedean's Twitter. Here it is. This is awesome. So they're both right. Here's the thing. They're both right. So Peter Brandt is looking at the technical view of silver. It topped at $50 back in 1981. It tops at $50 back in 1981. I'm rounding 48. It tops at $50 back in 2011. Again, I'm rounding. If it breaks this, shit's going higher. I mean, at least another $50 to $100 if it breaks this line. And I don't want to be out of my silver if it's breaking $50. If silver is breaking $50, I agree with Peter Brand. See, Peter Brand mentioned Wall Street Bets. That's where I picked that up from. So I'm absolutely agreeing with Peter Brand. If silver breaks $50, it's probably going to 100. And I'll wait. I'll sell my silver at $100 an ounce. But I also agree with Saifedean that silver is a shitcoin. Both things can be true. Both things can be true at the same time. And that's why I can't wait to exit my silver. And the higher they pump it, I mean, the better it is for my position. So that's silver. Let's look at GameStop. So GameStop is going down because I think the steam is running out. I'm going to delete these circles. They're no longer necessary. I've done my rants on GameStop. So that's not a good day for GameStop. And I believe, it's running out of steam. That's the daily chart. The MRI is not very useful here. We can look at the weekly chart. The MRI wasn't very useful there either. I'm going to drop this. I mean, this doesn't really matter anymore. And look at the monthly chart. Monthly chart had an MRI top. Called it perfectly. But again, I wouldn't use the MRI on this. It's pumping. It's meant for more orderly assets. This was just, a giant pump and probably a dump. Now, we can look at the 1 hour chart, see how we're doing today. Look, I would be careful. I still advise people not to be in this name. I wouldn't be long. I wouldn't be short. I would stay away from it. Can I do TA on this? I can do TA on it because it is very clearly in a horizontal channel looking at the hourly chart. So if I draw a channel with the tone Vays rules they changed the way they do channels, which is almost annoying. Hold on. Okay. So the rules of my channel are I cannot break any of the bodies. Okay. So, but I will break this one here. So I believe we're near the bottom of this channel. And if this channel breaks one way or another, this thing is going to move. Now, if we break this channel to the upside one more time, if we can get a $400 close, there will probably be a massive short squeeze, part 3 or 4, whatever you want to call it. And this thing can move. This thing can probably double because the size of this channel is massive. The size of this channel is $100. Oh, it's not going to move that much. Size of the channel is $100. Percentage-wise, I'm going to go with a nominal value. Wait, was it $100? No, it was $200. Okay, there, 200. My bad. 200. This has potential to go up 200. I should make this arrow green, of course. That would really screw up the hedge funds. I think it's a bad idea, but hey, markets are markets. And the SEC will shut down trading. The SEC is going to shut this down. There's no such thing as free money, guys. If this thing goes above 400 and the short squeeze comes, the SEC will shut down trading on this asset. They will not allow major institutions to fail because of a coordinated social media dump. It's not going to happen. It's just not going to happen. It doesn't matter whether I agree with the SEC or not. they are going to shut this down. My opinion on whether that's right or wrong is completely irrelevant. They're going to shut it down. But if it crashes, they're not going to shut it down. If this thing starts to crash, $200, which would be interesting because it would take it into negative territory. But if this thing closes below, and it's dangerously close to closing below 200. If this thing closes below 200, it's over. It did already close this gap, and it closed that gap, but that doesn't matter. I'm liking my, even though like the MRI doesn't really matter here. This thing is going under $100 if it closes below 200. So if it closes above 400, it's going to go up 200. It's going to go up 50%. But if it closes below 200, it's going to go down 50%. So let's put a 50% down line. It's going down 50%. I'll put it at $100, down $100. It will take it to under 100. That's my view on it. That's my view on GameStop. So you can play with fire if you like, and the SEC is not going to shut this down. If this thing still starts crashing, look, the SEC kind of hates hedge fund. It's a love-hate relationship. The SEC has a love-hate relationship with hedge funds. And by the way, everyone should immediately go watch the show called Billions. Go watch Billions. Billions. The American television series. In the third episode, I want to say the third episode. Where can I get Billions? I'm going to go to Wikipedia, Billions TV series. I love this show. It's awesome. It obviously it gets worse with every season, like most shows, but it's a good one. Where are the episodes? List of Billions episodes. I want to point you to a very specific episode. Episode 4. I thought it was episode 3, but it's episode 4. Short squeeze. That's the episode you want to watch. This episode explains what is going on with GameStop. This aired in 2016. Ironically, this is supposed to be based on Stephen Cohen, and this is one of his proteges from the hedge fund. But in order to understand what's happening here, you have to watch episode 3. So episode 3 and 4 go hand in hand. Yum Time and Short Squeeze. Because the short squeeze involves the company Yum Time. Though not the company Yum Time, the delivery company for the company Yum Time. So if you really want to understand what a short squeeze is, you watch the first 4 episodes of this, but it's episode 3 and episode 4 are absolutely incredible, and they tell you exactly what's going on. This is literally the GME, literally GME. So check that out. I strongly recommend it. And after that, after you watch the first 4 episodes, if you don't like the show, don't watch it anymore. But if you want to understand GameStop, that's what you watch. They literally have an episode called Short Squeeze. It was great. Awesome episode. Okay. So where are we here? Let's go back to GameStop here. So that's my view on GameStop. As long as it's in this zone, to me, as long as it's in the zone, it's in a no trade zone. Now, for me, it's always in a no trade zone because if it goes above 400, I believe it's going to pump huge and the SEC will shut it down. And if it goes below 200, I'm expecting it to crash, but I'm not dumb enough to short this thing. It's like shorting a shit coin. I don't short shit coins. I'm not that stupid. The movie The Big Short was also pretty good. I lived it. I was at Bear Stearns. I was part of the collapse. Still waiting for Bcash to go below 1%. So this is a long-term view of the S&P 500. Let's look at the short term. We are doing okay today. We are holding a somewhat critical line. I should probably bring moving averages in. That would be smart. I can drop this. Let's bring in moving averages. I have to save. I have to refresh. Man, I keep trying to do short shows, but it's hard. So Elon Musk said yesterday that he's late to the party, but he believes in Bitcoin. Elon Musk is not late to the party. No one is late to the party. Can the squeeze also happen to the downside? Meaning put sellers will have to crash the stock to cover their uncovered puts. No, that's not exactly how it works. So it's very difficult to, no, it doesn't really work that way to the other side, because there's a floor. There's a risk floor. Calls have unlimited risk. Puts have calculated risk. It's not a one-sided market because there's a zero bound. We learned that oil doesn't have a zero bound because oil went to negative $40. How do you trade a gapping market in stocks? Very carefully. In my videos, we spent in my educational videos, we spent a little bit of time on gapping markets. Look, if you guys are going to buy these, I strongly recommend this, the technical analysis and risk management. I'm always cringing when people only buy the technical analysis. Please buy the technical analysis and risk management. It's only going to cost you an extra $150, and it is absolutely worth it. Absolutely worth it. So S&P, I was going to add moving averages. Nope, that's public library. My scripts. Moving average forecast. There it is. Yeah, I need to release the my moving average forecast, but yeah, so it's defaulted to 2050. Ugh. I'm not that happy about this. Yeah, it's 2050. Oh, no, wait. Whoa. Yeah, it's 2050 to 100 daily, 715 and 50 on weekly. Okay. Really? The daily? That's the 50 on the daily? That seems a little too high. Something's wrong. Hold on. Oh, 20. Yeah, 20 makes sense. Yeah, 20 makes sense. That's the 20. Yeah, that's 20. That's 50. Yeah, that makes sense. We're holding the 50. We're certainly holding the 200. That seems a little high. Hold on. I need to make sure that this thing is functioning properly. Yeah, it's right. Okay. Yeah, that's the 200. Feels kind of high for a 200-day moving average, considering that this happened. But that's already out. That's over a year ago now. Okay, yeah, it makes sense. Makes sense. So it's very neutral right now. I'm not gonna be long or short. AMC, NOK, and BB. All right, I'm going to look at these, then we're going to call it a day. The weekly long-term view still looks very bullish. All right, let's get out of GameStop. We're going to do AMC. Remember, guys, Wall Street bets are going to move on to another shitcoin, to another shit stock. They're going to move on to another shit stock. They're not going to keep promoting the other one. It's bullish, but it's a triangle. Guys, I'm telling you, the SEC is going to start shutting this shit down. Oh, the love-hate relationship with hedge funds. Okay, so here's where I was going with this. The SEC's love-hate relationship with hedge funds. If hedge funds didn't exist, the SEC would not have a job, okay? So as much as you want to destroy all hedge funds from existing, all of the employees of the SEC will have nothing to do, okay? They also care about their job. Their job involves monitoring hedge funds and fining them for their survival. They will not let a bunch of Redditors take down the hedge fund industry. It is the survival mechanism of a 3-letter agency in America that can police the world. Okay. Now, it's possible that they have enough work to do with ICO scams. It's very possible that they will just say, okay, let all the hedge funds die. We have plenty of scammers in the crypto space, and we can still stay employed. But the majority of their work relies on fining hedge funds for bad behavior. And they will not, cut the head off their golden goose. So if a bunch of people on social media are destroying their golden goose that pays their salary, they will shut this shit down. The next time there was even rumors of an asset, it's kind of like, a rigged boxing fight, right? Like there is the boxing commission and we know how rigged boxing is. But when there is a lot of rumors swirling around that a fight has been rigged, the commission takes the fight down and it does not allow any legal gambling on that fight because there are rumors that the fight has been rigged. This is going to end the same way. It's going to end the same way. When Wall Street Bets or some other, social media powerhouse starts to put a lot of effort into moving a stock, the SEC will just shut down trading on that stock. It's going to be like a game of whack-a-mole. SEC will shut this shit down. So don't think you're going to buy into AMC and watch it go to $1,000 a share. They will stop trading on the stock. Yeah, guys, please subscribe. Okay. Triangle did not resolve to the upside. You wait. Can it pump? Of course it can. We got 2 more. NOK. No, I think this is over. I wouldn't bet on this happening again. Man, so many people were buying into this thinking it was going to be the next GameStop, and how much money did they lose? See, this is why I stay away from the shitcoin casino, whether that shitcoin casino is in the crypto space or in the failing company space. I think Nokia used to make toilet paper before they got into the cell phone game in the .com days. I think. Don't hold me to that. And what was the last one? BB, BlackBerry. Jesus Christ, I can't believe people are still using this. Again, it's over. Look, it pumped, did its thing. If you didn't get out, you can hold on to those bags, but these companies are not going to change the world. I mean, BlackBerry might have some intellectual property, but BlackBerry was probably, no. I mean, it was a good buy at like 3 cents, thinking that someone's going to buy them out, like what happened with GoPro, I think. By the way, I still have my GoPro. I just bought a bunch of accessories. I might start using this as my webcam because honestly, I think every webcam on the market sucks. They're all terrible. There is no good webcam. I have now come to the conclusion that there is no good webcam. Right now I'm using a good camera, but on the road I might find a way to use this as a, because I have no other use for it. Now I wish I bought the 9, spent an extra $150, but I got cheap. Or was it like an extra 200 or something? All right, GoPro. Yeah, I remember talking about GoPro when it was like a $3 stock, $2 stock, $1 stock, $2 stock. And I was like, man, someone's going to buy them out for intellectual property. They didn't, but GoPro's been doing well. Hell, even I bought one. GoPro was a good buy. Man, I made some money on GoPro, but I didn't hold on to the trade. Anyway, I got to go, guys. Right, they're offering beta webcam software. I heard it sucks. Honestly, everything about GoPro kind of sucks. Their software is absolutely terrible. But maybe they'll get better one day. I don't know. There's a reason why their stock was $2. I hate the fact that it's like a fisheye. I hate that. Ticker AG. Oh, I don't know what the hell this is. Oh, silver. Okay. Silver miner, I guess. I mean, yeah, if silver is going to be $100, these mining companies are going to mine the shit out of it. It's a lot of gaps. I wouldn't be in this. I mean, the time to buy was when these MRI bottoms came in. Oh, I'm on the 1-hour chart. That's not very useful, is it? Boom. It's over. Going down. It's been going down. That's a down. That's a bad candle. That's a down candle. Yeah, today was the exit day. Beautiful exit day. MRI top, exit day. Good call. Wirecard, didn't they go bankrupt? Didn't they scam a bunch of people? Whoa, that's Wirecard. Yeah, why? Why are we looking at this? They're bankrupt. Oh, it allows you to remove the fisheye? That's beautiful. Yeah, I got to look into that. Hey, guys, I got to go check out my Twitter. And if you speak Russian, come join us on Forklog. Just retweeted it. Okay? Haven't been on that show in over a month. Thank you all for watching. Please support by going over to tonevays.com, on-demand videos. Those interested in MRI, still on discount. The price of MRI will rise to $1,000. Right now it's $500. It will rise to $5,000. It would rise to $1,000 from $500 sometime later this month. And my other videos will go up as well. Okay. Free learn trading. And I mean, if you don't have TradingView, please use this link to sign up. Some other affiliates. Embly's not taking anyone right now. Joe Sass hasn't been on the show in a while. And if you want to buy the dip shirt, go for it. Hey, guys, thank you all for watching. And see you all. I have my own store, too. And see you all on the next one.